currency update. It's been a busy week in foreign exchange markets with a number of important, but at times competing themes. One that's been very dominant in my thinking about the Australian dollar has been the continued strength in coal markets in Asia. The price of coking coal used in steel production has risen considerably from sub $80 in November of last year to $250 as of last night. That's an incredible move and one that has certainly caught a lot of forecasters by surprise. While the price of thermal coal used in energy production across Asia has been less spectacular, it's risen from sub $50 in April to all but touch $100 last night. And with the price of iron ore above $60, this helps lift mining investment and jobs. It improves the federal and state budget positions, and it also improves nominal GDP and income in the Australian economy. Now that should, all other things equal, help lift the value of the Australian dollar. And the Australian dollar did rise modestly this week, helped by a stronger than expected headline inflation outcome. We saw a high of 77.09 on Wednesday. However, the US dollar has continued strengthening in foreign exchange markets. Money markets are now priced 75% for a 25 basis point rate hike from the Federal Open Market Committee in December. And the Fed does meet next week, and it's likely to give a clear message to money markets that, barring any near-term deterioration in the US economy, a rate hike will be on the table in December, though the US election the week after next may see that message somewhat nuanced. Now, the prospects of higher rates in the US is clearly lifting the US dollar. Dollar yen, for instance, above 105 for the first time in 3 months. The euro at 7-month lows below 109. And the US dollar against the Chinese yuan close to 678. That's a 6-year high. And with global bond markets under pressure, the Australian dollar is likely to continue being capped by 77 cents, and I think probably set to remain in a 75 to 77 trading range next week. Now, next week is again likely to be a very busy week for economists, strategists, and the foreign exchange markets. We've got a number of central bank meetings, including the Reserve Bank of Australia and the Bank of Japan on Tuesday, the Fed on Wednesday, and the Bank of England on Thursday too. Now, Westpac and the market expects no change from the RBA, but as ever, commentary in terms of the outlook for the economy, inflation, and the Australian dollar will be important. Next week, we also have mercantise trade data on Thursday, and that pickup in commodity prices should see a further improvement in the underlying deficit. On Friday, we also have retail sales, which will probably continue the trend of softer household consumption here in Australia. And to cap off a very busy week, we also have the US non-farm payroll report, which will give us a clear indication of the jobs picture in the US into the US presidential election. These are all factors we can talk about in next week's currency update.